What's up, guys? I'm Nobody Special. And wouldn't you know it, the financial press is finally starting to cover the inflation story. And it only took 18 months of quantitative easing and trillions of dollars of money printing and astronomical price increases and shortages of everything and the most ridiculous overuse of the word transitory. Now they're finally covering inflation. Nice of you guys to show up to work today. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And wouldn't you know it, finally the financial press is giving the inflation story the coverage it deserves. After 18 months of ignoring the problem and saying it was temporary and acting like you can print trillions of dollars without consequence, and just reassuring us, go ahead and buy these high multiple tech stocks and follow Cathie Wood and ARK Investments and all these big market disruptor innovation buzzword. Finally, they're covering the inflation story. Finally, they're giving it the attention it deserves. Before we get too far into this, folks, I have to ask, could you please give me a thumbs up, subscribe to my channel, hit that notification bell. It really helps me out, helps me to keep this channel growing, and I'd be forever in your debt. Now with that, we are going to shrink my big melon of a head. Melon man. And here we are, the big story on CNBC. Paul Tudor Jones says inflation could be worse than feared. Biggest threat to markets and society. Interesting. You notice some strong language there. He didn't say threat to stocks. He didn't say threat to the S&P. Threat to markets and society. That's interesting. Keep your eye on that. I've heard of, threats to stock valuations or, could cause trouble in the bond markets, but biggest threat to society. Wow. Strong language from Paul Tudor Jones. Jones, a billionaire hedge fund manager, believes inflation is here to stay, posing a major threat to the U.S. markets and economy. Inflation is probably the single biggest threat to certainly financial markets, and I think to society just in general, he told CNBC on Wednesday. Jones said trillions of dollars in fiscal and monetary stimulus is the impetus for inflation to run hotter for longer. And one wonders why it took a year and a half and a cameo from Paul Tudor Jones for CNBC to mention how printing trillions upon trillions of dollars might cause inflation. This is not complex economics, folks. You don't need a PhD. You don't need any kind of graduate school study. You don't need to be a Nobel Prize winning economist or a laureate or whatever. You print money, you get inflation. That's how it works. It is absolutely that simple. And yet here we are. Finally, October of 2021, they're finally talking about this. It blows my mind just absolutely how asleep at the wheel the financial press has been through this whole situation. And they've been doing it because they like the stories about the high-flying tech stocks. I just want to read you some of Paul Tudor Jones' quotes here. I think to me the number one issue facing Main Street investors is inflation, and it's pretty clear to me that inflation is not transitory, you think? It's probably the single biggest threat to certainly financial markets, and I just think to society in general. Reading on, inflation can be much worse than what we fear. We have the demand side of the equation, and that is 3.5 trillion greater than what it normally would have, just sitting in liquid deposits. Okay, he's talking about money on the sidelines. I'm not sure the source of the $3.5 trillion, but a lot of that is probably, think the money in your reverse repo crisis, right? The stranded capital that's really just sitting there, not sure where it wants to go. Asset bubbles are already overinflated. So there is a lot of money just sitting out there in people's accounts that could get spent at any time. And if that happens during a time of shortages or during a time of overinflated asset prices, well, that could make shortages worse. That could inflate bubbles further. So he's worried about that money going to work. Reading on, he says they can go into stocks or crypto or real estate or be consumed. So that's a huge amount of dry powder just sitting, waiting to be utilized at some point, which is why inflation is not going away. And he's right about that, folks. Inflation is not going away. Although we may read on that appears to be the strategy of these geniuses in monetary policy and in Washington to just hope inflation goes away. And it wasn't just Paul Tudor Jones. It was actually Jim Cramer, too, talking about inflation today. Here's coming over to this video. We're going to shrink me a little bit more here. Let's see what Jim Cramer has to say about the inflation story.
Yeah, I mean, look, I think Paul Tudor Jones, as always, is right about inflation. It's much worse than we thought. I keep hoping the capacity will come on and make it so that it's not as bad, but it just can't seem to come on as fast enough. I mean, for instance,
so he thinks Paul Tudor Jones is right about inflation, and it's much worse than we thought. Funny, Jim, that's not what you've been saying for months. For months, you've been saying otherwise. And also, did you say I just keep hoping more capacity comes online? How many times have I heard Jim Cramer say hope is not a strategy? Hope is not a strategy, Jim. We don't hope capacity comes on. Capacity coming online requires capital investment. It requires CapEx. It requires investment. You know those oil stocks and those energy stocks? You know those companies that you've been saying are uninvestable because of ESG mandates at pension funds and hedge funds? You know those oil and gas stocks that, boy, it'd sure be nice if a couple of years ago they had sunk some money into some new wells or some new mines, so maybe we'd have some new energy capacity coming online right now as our production is going down and demand is going up, and now we have widespread energy shortages causing shortages of everything from fertilizer to base metals. Gee, Jim, it'd sure be nice if you and the ESG crowd hadn't cut off an entire sector of the economy from funding for 10 years. Okay, I'm getting a little verklempt here. Talk amongst yourselves. All right. But, so what Jim says here, I think he's right. I think inflation is much worse than we thought. I couldn't help but point out a couple of things Jim Cramer said in the not too distant past about inflation. Now he's saying, I think he's right, inflation is much worse, where here's what he had to say back in May. You notice this sign in the background here, much ado about nothing. Commodity inflation, inflated wages, the state of the consumer retail spending. Seems here Jim is saying inflation's a nothing burger. Let's see.
meanwhile, the semiconductor shortage will get resolved. We already got an inkling of what this will look like when we heard that Applied Materials is boosting wafer fabrication for everything. In fact, Applied Materials is signaling that the entire semiconductor capital equipment industry is boosting production. So don't bet on the shortage to continue through the end of the year. I think that you saw the stocks like Lam.
So don't bet on the semiconductor shortage continuing through the end of the year. Boy, that hasn't aged so well, has it? Here we are mid-October, Jim. You got 2.5 months left in the year. And we are no closer to the chip shortage going away than we were back in May when you said this. And now here you are today saying, oh, I think you're right. Inflation is much worse than we thought. Seems a couple months ago you were telling people this story was going to go away. But that's not the other one. Here, let's go back a little further. Here's early May.
You're not concerned about inflation.
I think that inflation can take care of itself. We need.
What does that mean?
Well, because a lot of the inflation that you see at a Clorox, say, is from the superstorm Uri.
So it's for the underlying plastic that all their products.
I think inflation will take care of itself, he said. Yes, inflation will just take care of itself. Look, the inflation problem is not going to take care of itself, all right? And Cramer was saying in that clip that it was due to the effects of a storm in the Gulf affecting plastic producers. And in the prior clip, it was because of the chip shortage and that issue was going to solve itself. Look, these issues don't solve themselves. These are systemic problems in the supply chain that are caused by an imbalance in supply and demand that have been caused by trillions of dollars being dumped into the system. These problems do not sort themselves out in short order. These are monumental problems caused by the period of the single largest amount of quantitative easing globally, not just in the U.S., but in Europe and China, everywhere, that the world has ever seen. You cannot dump this much currency representing zero value into a system while simultaneously shutting down production for a whole year and then expect everything to just go back to normal. It doesn't work like that. Now, of all the people on TV today, I have seen one guy who seemed at least genuine in where he was going with this inflation story. And that was Mr. David Einhorn, president of Greenlight Capital. And I found this clip to be very powerful, and I want to play this for you now.
Let's get right to it, though, and welcome in our first headliner of the day, David Einhorn of Greenlight Capital. It's good to see you again. It's been a while. Welcome.
Good to see you, Scott, and congratulations on your 10 years.
Appreciate it very much. I have your most recent letter in front of me, David, that just dropped this morning, and it's clear that you are very much focused on inflation. You say, quote, inflation is here and it appears poised to worsen. You don't think it's as transitory as the Fed says. Why do you think the Fed is so wrong?
Well, I don't think they have any choice. I think the Fed is committed to a position that just has to hope that inflation goes away because they don't really have the stomach to fight it. So they have to obfuscate the data. They have to kind of hope it goes away and kind of see what happens. But when you look at what's actually
I want to pause it there because that was important. There's a couple of things he said. First of all, the Fed does not have the stomach for the fight. And he's absolutely right. To really fight inflation, to really take it on, requires painful decisions. Hiking interest rates, which makes borrowing costs go up, which drives companies insolvent, which puts people out of work, which puts people on breadlines, which means people lose their homes because they can't afford to refinance their mortgage because now a refinanced mortgage will be at a higher rate than it was before. All right. The last time we fought inflation, the last time we made a measured attempt to fight serious inflation in the 1970s, there was some serious problems of high unemployment and a total downtrend in the real estate market that resulted from Paul Volcker's actions in the early 1980s to fight inflation. Okay, we do not have the stomach for that. All right, we are not the same society we were back then. You see, now we have this unfortunate belief somehow in the system that any kind of hardship can just be legislated away. That if any part of your life is difficult, it's somebody else's fault. And if the government would just pass a law or make it free, it would go away. And that kind of a mentality is not up to the fight that it's going to take to defeat inflation, not after the amount of money printing they've done. So Einhorn is right on the money here. The Fed, and I would surmise to say the entire country, does not have the stomach to fight inflation. And you'll see that later on, it's actually been that way for quite a while. This is not a new phenomenon.
Actually going on, there's both the monetary and the fiscal policies which are causing inflation, but also there's a real shortage of things. And it's not just bottlenecks. Some of it comes from a lack of investment because companies that actually make things don't get a lot of investment in the market. And so they have very high costs of equity, and so they choose not to add capacity.
That's important right there, folks, because that is talking about a structural underlying weakness in our markets right now. And he said right there, these shortages are not just being caused by monetary and physical property. They're being caused by a lack of investment. All right, I ranted before when we were listening to Jim Cramer about the Cathie Woods and the ESGs and how, the big high multiple sexy tech stocks, that's what's been getting all the investment. And it was absolutely uninvestable to invest in the energy space, and how the banks would, because of ESG mandates, have cut the energy industry off from funding for new gas wells and new oil wells, and how now we have an energy shortage resulting from it. And Einhorn is right on the money here. He's saying a lot of these shortages is not just the result of the money printing. It's this systemic flaw in our thinking. And that's not going away anytime soon. It's going to take major capital investment to climb out of this hole. And we don't have the desire to do that right now. That's just not there.
And so that's why we have shortages of all kinds of things, from energy to materials to a lot of goods in companies that many people think are just sort of boring, and so they trade at low multiples. And so the managements don't invest in their businesses.
You're pretty critical of Fed Chair Jay Powell. You say, quote, he hasn't lifted a finger to fight inflation. Instead, he has maintained a policy designed to create inflation. I don't know if you saw Paul Tudor Jones on the network this morning. He called Fed policy the most inappropriate monetary policy of his lifetime. Let's listen to what PTJ said.
Before we get into Paul Tudor Jones' quote here, I want to back up a little bit on what Scott Wapner was just reading, which was an excerpt from Einhorn's letter to his investors about how Powell has not only been not interested in fighting inflation, but he's been pushing a policy that creates inflation. And that's important because Powell talks, right? It's a song and dance. He's singing show tunes when it comes to monetary policy. He's saying inflation is temporary, transitory, as he's been continuing to pump money into the system. As he's continued to make the inflation problem worse, he's been telling us it's not a big problem. All right? So Powell's failure is twofold here. Not only has he been pushing these inflationary policies, but he has been spinning this transitory misstatement, outright lie, that inflation is going to be temporary.
This morning, David, and we can react on the other side, and I'd like your thoughts too.
I think the thing that to me is the number one issue facing the Main Street investors is inflation. And it's pretty clear to me that inflation is not transitory. It's here to stay. And it's probably the single biggest threat to certainly financial markets. And again, probably, I think, to society just in general.
It sounds to me like you and Paul Tudor Jones agree almost 100% on the issue of inflation.
I guess that's right. I agree with everything I just heard him say.
The problem is you say that they don't have the stomach. I think that's the word you used, making the point that you think they're afraid to do anything because it may cause a recession and cause the stock market to crash.
Yeah, that's right. When this chair had a tighter monetary policy in 2018 and the stock market began going down and he began to face criticism from President Trump and from others, his response was to just get out of the kitchen. And he pivoted, changed directions, and chose to avoid criticism rather.
So that's important right there. We're going to cut off here. But I want to emphasize what he just said, that we demonstrated our lack of an interest in this fight way before the pandemic. He's referring to December of 2018 when we were engaged in quantitative tightening at that point. They had been raising interest rates and they had been actually reducing the size of the Fed balance sheet. And the stock market panicked in the late fall, early winter of 2018 into early 2019. And after a lot of criticism from then President Trump, Jerome Powell very abruptly reversed course and started lowering rates. And then a few months later, after the repo madness in September of 2019, actually began quantitative easing. So we have been heading in this direction. This is not just a pandemic issue. I want to emphasize that, all right? We demonstrated our lack of a stomach for a fight as early as 2018 when Powell very abruptly went from hawkish policy to dovish policy based on what was essentially a pretty minor sell-off in the grand scheme of things, right? I mean, we lost about 1,000 points in the Dow in December of 2018, and it looked like we were heading towards some hardship, right? We were long overdue for a recession, folks, and we still are. Now we're just further overdue for a recession. Powell showed that he had no stomach to endure a recession, and after pressure from President Trump, which, look, regardless of your position on President Trump, he set us down this path with his insistence that the Fed begin a dovish policy. Right? Now, the Fed did not have to listen to him, but they did. So we've been heading down this way. And then, of course, with the onset of the pandemic, the doves just took over and absolutely just money raining from heaven, interest rates to zero. And that has continued under President Biden. So really, we were set down this path a long time ago. So long story short, finally, we're getting a little bit of honesty in the financial press. We're finally getting the coverage that the inflation story deserves. It's too little, too late, in my opinion. And I don't see this problem going away because, as Einhorn mentioned in that final clip there, in order to fight inflation, it requires enduring some serious hardship that, as a society, we have demonstrated we're unwilling to endure. And I don't see that changing anytime soon. I've only seen that getting worse, where now people seem to have this mentality that any kind of hardship can just be solved with the stroke of a pen in Washington, and we can all live these wonderful, prosperous, perfect, worry-free lives. Anyways, guys, that's all I got for you today. I want to thank you for your time. Thank you for watching this video. Please remember, give it a thumbs up, subscribe to my channel, hit that notification bell. It really helps me out. Until next time, live small and dream big.